have to bother anyone else. Okay. So I'm actually recording this right now. So, right, what is Forex? It's the world's largest institutionalized market. It trades at a volume around $5.4 trillion in one day. Stocks are being traded. Every single stock market in the world combined is around 200 billion. That's like nothing compared to Forex. It's like it dwarfs stocks. It's unfathomably like giant. It's crazy. And like I said, the reason for this difference is because the banks, they're transferring huge amounts of money, right, between like each other. Like Forex really, that's what's making the big moves. It's the banks, it's the institutions, it's the world's governments. That's what's moving the market. And obviously, with this amount of money, it's extremely volatile. Volatile means, like I said, dangerous. But what does that mean? It means that there's huge spikes at certain times of the day when there's overlapping between sessions. You can like make easy money with during these times, and we're gonna go over all of that. Don't worry. Um, and now the currency pairs are there's a lot of pairs that are very liquid, and these gaps that you guys see, they rarely occur. And if you don't know what a gap is, it's when let's say that you have a high demand in the stock market, for example. This happens all the time because they're not as liquid as Forex. Let's say that you have a stock, right, and it closed on that day with a lot of demand for buy orders, and then the next day it opens, you see a huge gap up. A lot of people like these gaps, but I personally think they're extremely dangerous to trade, and they can stop you out with like they it's called slippage. Okay, they can stop you out of your stop losses without even, you understand, they'll go lower than your stop loss. You can actually get like effed over from these gaps. So I personally try to avoid these kind of things. And you also want good liquidity, sorry. And liquidity, all you need to know is just how easily you can get in and out of a trade. Okay. And also means that the spreads will be smaller. And the spread is the difference between the bid and the ask. I meant to write buy and sell. I wrote ask by accident, but that's supposed to be buy and sell. The buy and the sell, like the amount that the broker will sell it to you and the amount that you can buy it for, that difference, it's usually like 0.5 pips, 1.5 pips, something like that, right? That's called the spread. So the more liquid and the more volatile the currency is, the smaller the spread will be, which is good because the spread is where the broker makes his money. So you want to buy when the spreads are small. And that's basically about that. Okay, so let's just keep going here. So now the question is when, and that really depends on what you want to trade, right? Obviously during the Asian session, the Australian dollar, the New Zealand Kiwi, right, the Japanese yen, these are going to be active during the Asian session the most. But just so you guys will understand about the Asian session, it happens between 6 and 3 a.m. in Eastern Standard Time, which is our time. For those of you guys in Israel, you guys can just look that up to your time. I don't know exactly what time that is. I'm too lazy to do the math. So but during these times, the market is not really moving so much. Doesn't mean you can't trade it, but I personally don't trade the Asian session. I stay away from it. Now, London session is pretty volatile. It's the second most active, but the thing is that it starts at 3 a.m. until 12. Now, at 3 a.m., I'm sleeping, right? So I'm not going to be up 24 hours catching all these moves. Okay, and then the New York Open is from 8 a.m. to 5 p.m. So you're asking yourself, okay, so what does all these numbers mean? Like, so you're all you're gonna do is trade from New York? No. As you guys can see, these sessions overlap, right? Look, London, 3 a.m. to 12, New York, 8 to 5. So I wake up at 6 every day to trade. If I'm waking up at 6:30 a.m. every single day, right, until 9, that's like very active. Like the market is moving a lot. There's an overlap between the London and the New York session. And there's the New York Stock Exchange open at 9:30, which brings in a lot of traffic for Forex. And there's also like news events happening, and these are the best times to trade in the market during these hours. And then I said it's very important to identify the times which your currency pair moves, because you want to catch these moves, because you don't want to trade when the market's doing something like this. You guys see, I drew this little box here where the market is ranging. It's consolidating. That's the word we call it in trading, consolidation. when the market is not moving up, guys. You see, it's just not moving, and you don't want to be caught in these time periods where it's just not moving, because you're gonna not make money. Your money, let's say you make a buy order right here, right? You bought the market right here, and then it goes up, and then it goes down, and it's just playing with your emotions basically, and you don't want that to happen, right? So that's basically what you guys need to understand. You need to understand when. Oh, I met this guy. Okay. Hey Wilson, what's up? We just started around 10 minutes ago. Okay. So basically, you don't want to be stuck when the market's moving like this. Okay. That's what I want you guys to take from this. So really, like, and in Israel, by the way, for those of you guys who are there, you can trade in Israel. I looked it up. There is brokers that you can use, and the hours will be different. So 6 a.m. for us is like in like the afternoon for you, right? So you guys can, like, it's a lot more flexible for you guys, and that's when the market is really moving, and you guys can catch these moves, and they're happening every day. Okay. Even today, I want to trade just now, a few hours ago. Okay. What's that? What'd you say? Okay, let's keep moving. Okay, Jacob B. Hello, Jacob B. AKA Elliot. Welcome, welcome. We're just going over the market right now. Just started around 15 minutes ago. So this is basically, guys, I am recording this. So for those of you who are just coming in now, you can go back and watch the recording. You didn't miss so much, but I just want to keep going for those of you that are actually in the beginning. I don't want you guys to go over everything again, obviously, right? So let's keep going here. Okay, where, right? This is happening all over the world. Every country is engaging in this market. This is the world's economies in play. That's why the market is so big. You understand? So you can trade from anywhere in the world. Every country that has their currency on the market, even the shekel, even though it's not really moving so much, but that's okay. Let's keep going here. So now, why, right? This is more of a discussion. My opinions, what I think. You guys can unmute and talk, but here I just wrote, like, these are just topics that I wanted to bring up, but it's more of a discussion. Like, I also want to hear, like, I will say what I think, and I also want to hear what you guys think, why you guys were interested. But let me just say first what I think, like, what I think is the benefits, the main benefits of trading, and then we'll go from there. Okay. So like I said earlier, it's accessibility. You can trade at any time in the world. You guys can go on a trip to Thailand and trade in the Asian session if you want. You can go get a hotel in London and trade in the London session. Like, you can literally go anywhere and respect the market hours. It's amazing. It gives you some sort of, like, freedom for those of you who are active in the world, who wants to travel, whatever. I know COVID right now, but like in general, that's just something that's a benefit that the stock market doesn't really offer. The stock market is I mean, it's not limited just to U.S. clients, but it mainly is, and it only works during the U.S. hours. Doesn't mean you can't trade it anywhere else in the world. It's just not as active as Forex, and that's something that is basically true. It's not a matter of opinion. And depending on your plan, you can have a pretty low risk with high rewards, right? And what does this mean? Okay, what this means is that, unlike stocks, you can't day trade. You can day trade Forex, and you don't need to have $25,000 in your account. Yeah, and yes, you can day trade options. Okay, but options. Now, I actually studied options just when I was first starting off. You have to understand all the Greeks theta decay, which is your options decline in value over a specific amount of time. And if you're just buying and holding and selling the same day, that has a lot of risk. And you're only going to make serious money if you're putting down like $1,000, $2,000, which I see in a lot of groups that I'm in, people doing. And me personally, I don't want to risk thousands of dollars a day just to see these returns, like on options, and you have to pay premiums on these options. Like, options, I see them as just the rat race, because you can't afford to buy shares and day trade them. So you're day trading options, but they do have a lot of risk. So in my opinion, in this case, for those of you who don't have all these high amounts in your account, Forex is a lot safer to beginning investors or traders. It's more enticing for that reason. Yeah, I just explained this here. right? Obviously. And most brokers don't require that you deposit thousands of dollars. You can start off with like $100 in your account. There's even brokers that don't require like a $1 minimum deposit. Now, obviously, if you want to make serious money, you have to have some money to start off with, right? I'm not saying you can get rich quick with $100 in your account, right? Obviously, you would need some sort of starting balance. Um, you would like I would recommend honestly $1,000. I personally trade with 10,000, but that doesn't mean that you have to have $10,000. You can start off with 1,000 and make returns. There's a guy that in a group that I'm in for Forex. He started off with 1,000. He made in a month he made $3,100 out of his 1,000. Okay, it's slow build. It's a gaining. He's gaining slowly, but I mean, you don't need to have these crazy amounts of capital to begin, which is a very enticing part of Forex, which is the reason that I started getting into it. And here I wrote less noise. I focus on 1 or 2 pairs, right? Um, what that means is now obviously like let's compare stocks for example, just for 1 second, to emphasize what I'm trying to say here. Now, this isn't really an issue, but it's just something that I personally prefer in the market is that there is just less noise. Like there's less stocks that you have to follow up on because day traders, like they don't day trade the same stocks, guys. Like they have a watch list that is based on market cap. It's based on earnings ratios. It's based on, the momentum in the market at the moment. It's based on, how much they expect the market to move up, right? Like these things require a lot of attention. And when you're just trading like between like right now I'm trading like 3 pairs right now, but I'm really heavily focused on one. Okay. And that's the pound yen. And I'll explain why I trade that later on. But like when you're just like making most of your money, like 85% of your money from just one instrument, it's just a lot easier. Like you don't have to focus on all these other, you don't have to focus on what's on Mara calls, and you don't have to focus on all these other stocks that are going up and down. And it's just like it's a lot of headache, I think, like to be like watching simultaneously 20 different stocks at the same time. Like I personally just don't like that. And nothing's wrong with that, right? There's absolutely nothing wrong with the stock market. It's just a preference, and everyone needs to do their own, how do you say shikulim? Wow, I forgot the word in English. Who knows though? How do you say shikulim in English? Anyone know? Considerations, yeah.
Their own shit.
Let's see what else. Okay. And this is basically like economic stuff, like learning about being up to date with news events. I'm sure most of you guys didn't even know about the earthquake that happened last week in Japan, but yeah, there was one, and that really affected the yen, and that went up. And I caught that move, by the way. But these are news events that are happening. Like you're actually staying up to date in politics. You're up to date on the Brexit deal that's happening right now in England with the effects on the economy, and you're just following other world like you're following the other countries in the world. It's just super interesting. Um, Obviously, some people don't like that because it's a lot of news to follow. But I mean, it's not that big of a deal, and I think it's interesting. Let's keep going here. Unless someone else wants to say something about that, something that they think if that interests them, I would be down to hear what you guys think about that. Okay, I guess not. Let's keep going here. Okay. So now how, right? How is the market moving? So like I said, it's by major players like the banks, but it's also by the actual economy of the countries, like the GDP, which is the gross domestic product. It's how much the country exports. This is a representation of the country's the country of interest economy. Okay, you have inflation, right? How much, for example, the US dollar, how much it's decreasing in value over time. And by the way, the dollar is significantly decreasing over time. If you guys look at the DXY, which is the dollar index, it's just in a clear downtrend. And it's been like that for a very long time. And that's because of debt, that's because of the current economy. Like it's just very interesting to be aware of the macroeconomic factors in currencies. Then also, you have bank interest rates. Right now, the yen's interest rates are going down, which is not good. And the yen, in terms of value, is decreasing. So if you're trading pound yen, for example, the yen has been going up. If you guys have not noticed that, look at any chart right now that has yen at the end. up, up to the moon. I'm telling you guys, I have been making money every day just buying, like just doing longs on the yen pairs, and they just keep going up because I'm aware of the market news. And then obviously you guys have unemployment, right? Um, and these reports are happening every week. There's like you have the non-farm payrolls, right? Which is basically it's a huge news event in Forex. It just means that it's just the US dollar, like it's an index basically showing unemployment rates and how many people are actually employed right now. And if it's low, then the US dollar will weaken. And these news events spike the market. Like I'm talking to you about like like a major increase in value. Like if you guys catch that, you guys can make like triple, quadruple your money in like less than 10 minutes. And I'm not even joking. And I can actually show you that if you want. I'm being straight up. Like there is so much volatility. It's insane. And I love it. I love volatility. That's when you make all your money. So like I said, major economic factors of the opposite countries affect the value of their respected currencies. So obviously, I already said this. If macroeconomics is interesting to you, then Forex is for you. And I don't have
No, okay.
I don't have an, I don't
No,
have an economic. What?
okay, I have to go shower. So go. Oh la la!
Elliot, can you mute
My God!
Elliot? Can you mute yourself, please? Thank you.
Oh la la!
Okay. Basically, I was saying that obviously I don't have an economics degree, right? I don't know everything about the economy. These are things that I learned with time. But if you just want to make money like in a predictable way without having to risk it on some bet, then Forex is for you. Okay. And here, I know it seems like a lot, but there's a website called Forex Factory. It gives you all the relevant news, and they give you it in folders, basically telling you how it's going to affect the economy. Red is high impact, low impact is just like a normal folder color. It's like a manila color. Like it just categorizes all these events, and it's just so easy to use fundamental analysis, which is understanding the news in your trading. All you have to do is just have a tab open. You don't have to know about all these things about the economy. You guys think I like study in my free time about Britain and stuff? I watch the news and I use Forex Factory, and you just use that while you're trading, and it's amazing. And it just organizes everything categorically, and it's just such a powerful tool. And later on, obviously, we'll be discussing how to use that stuff. This is just an introduction to all this entire world. Okay, I had to learn all these things. It took me almost a year to obtain this knowledge that I'm giving you guys right now. I hope you guys are really letting this sink in because it is for you. I'm not getting anything out of this. This is really to help everyone else. Let's keep going here. Okay, so now let's talk about what a pip is. Okay, it's a percentage in point. It's just called pips. Okay, it's just the increments of the currency. In stocks, they're called ticks. Okay, in Bitcoin, it's called Satoshi. In Forex, it's called a pip. It's all the same thing, okay? But we have to understand what it is. So I just gave a very simple example. Here, your Euro USD, the most commonly traded instrument in the world. Not in Forex. I'm talking to you in the world. There's literally not even Bitcoin compares to Euro USD. This is the most traded thing ever, okay? I personally don't trade it because of other reasons, but okay. Here, 1.5000. What does that mean? 1 euro is equal to 1.5000 USD. So let's say I purchased 10,000 euro at a price of $15,000, right? Because, right, we see 1.500 is the exchange rate. So that equals $15,000. Okay. So now we believe the value of the currency will go up, for example, let's say 200 pips. Okay. And this means that the initial 10,000 is now worth 15,200. So once you sell at 200 pips, which is your take profit, you sell the shares back to the broker and you keep the difference, which is $200. And that's just an example to explain to you how pips, basically manifest into your gains, right? Because that's how it works. So, it doesn't seem like so much $200, but I'll explain to you more on that in just a second because I do explain it. So let's keep going here. I hope that was. Does anyone have any questions about that? Because this is the more advanced part of the lesson here. Does anyone have any questions about this? What a pip is? Okay, if no one has any questions, then I'm just assuming that no one does. So let's keep going. $10,000. Anybody got time for that? Obviously, fuck you think this is. We aren't gambling here, okay? And you guys see all these people on Robinhood trading like $10,000 on one position, right? And then they make like $15,000. They're like, oh, I made $5,000 today. Oh, and like all this crap. Like, listen, I'm not doing that. I'm not going to teach you guys how to do that because I don't believe in that, And Forex is a lot safer if you're trading correctly, okay? And when you say, okay, how do I trade and make this amount of money, right? And how is it so much safer? And that's leverage. One word, leverage. Let's keep going. What the fuck is leverage? All right. Leverage basically just allows you to open a position you normally could not afford. That's why I need you. There is ways to calculate it and all this crap, but I don't want you to worry about that because if you're trading correctly, then leverage is not going to be an issue for you guys. What does that mean? Here, so I want you guys to read this as well while we're like I said, basically you can afford a larger position while only putting up a small amount of capital. Okay, U.S. regulated brokers offer up to 50 to 1. If you're not in the U.S., there's brokers that give you 500 to 1 leverage. Now, too much leverage is an issue, and I'll explain why in just a second. But 50 to 1 is more than enough. Okay, and 50 to 1 means for every dollar deposited, the broker will give you 50. So if I deposit $10,000, for example, which I did, I can trade up to 500,000 units in one session. Okay, what does this mean? We'll explain that later. Okay, so so I know leverage seems kind of confusing, but I just want you guys to. This isn't really like I'm not expecting you guys to understand all this stuff now and then go out and trade, right? I'm just trying to bring you guys into this world because you just don't know these things yet. So I just want you guys to gain this understanding. Okay, so I'm trying to keep it very simple, even though this is a very complicated subject. I'm trying my best to explain it in a way that everyone can understand. I hope it's getting through, and if it's not, then we'll have questions at the end where I'll just you guys can ask me whatever you want. Let's keep going here. Yeah, I put some memes into the stuff. I hope you guys enjoy that. Well, yeah, it is risky. Everything is risky. Amazon, Tesla, Google, Microsoft, Apple. They all had risk. Every single business you guys do has risk, okay? Even stocks, they have crazy amounts of risk, right? Futures, options, they all have risk, guys. Everything. But the thing about in any financial market, you need to be willing to lose some to make more. That's just how it works. You can't make reward without having any risk. Okay? It's just how it works. And we have to understand that. And for most people, they have an issue with that. And most people don't trade. But everyone here is interested in trading. So I'm very happy to see that at least. But there is something that we have that is a little bit different from the other markets. Risk management. Yes, risk management. Okay, this means we're only risking one. Oh man, I should have put a percentage there, my bad. But we're only be risking 1 or 2% of our entire portfolio per trade. Okay, what does this mean? Quick math. If we have a trading account of $10,000, 1% of that is $100, right? Very simple mathematics. So if I open a trade going for 15 pips and I'm only risking 5, that's a 3 to 1 risk reward, right? Because 5 times 3 is 15. So if I win that trade, that's $300. And the reason that it's so important is because, let's say, guys, you have a losing streak, which happens in Forex. I had a day. I'll actually show you guys my P&L very soon. P&L is profit to loss. I had a day where I lost 3 trades in a row, and that's like, and that was because of my psychology. And we'll get into that later. But you guys have drawdowns. Like, you're not gonna win every single trade, right? That's something you need to understand, and that's psychology. You need to accept a very simple fact. The second you open the trade, consider that money gone. It's in the market. It's no longer in your account. Okay, you lost that $100. That's the fact. Now the question is, will I get it back or will I take the loss? So you need to accept an amount that is comfortable for you. Okay, there's people that trade with 0.5%. So $50 because, okay, I lost $50. Whoop de fucking do, right? I want to trade 100 because I'm okay with losing $100. Okay. And if I'm risking 1%, I have to lose 100 consecutive trades in order to lose my entire account. Now, statistically, it's impossible that I will lose 100 trades consecutively without winning one. It's not possible. It's impossible for me to lose 100 times in a row. So if I'm looking at it in a statistics way, in a probability way, and I'm saying, wait a second, if I'm six, by the way, I am 60% profitable, and like I said, I will show you guys my P&L. I'm not afraid to show you my losses. Okay, if I'm 60% profitable, then there is no reason for me to not risk $100 per trade because I'm going to be winning most of the time. And if I'm doing a 2-to-1 risk reward, 3-to-1 risk reward, even if I lose twice and I win one, or I lose three and I win one, then I'm breaking even, or even I'm making more sometimes. So you need to understand the larger scale, not I lost one trade, okay, oh fuck this, right? It's because you need to accept. And I not only do I think, and I promise you, okay, I guarantee you that you will lose. You will lose in this game. You lose not every day, but you will lose 20% of the time, 30% of the time, 40% of the time, 50% of the time. I guarantee it. I promise you. And you will lose the same in stocks. You will lose the same in every other investment you do. If you buy Bitcoin right now, you're going to lose money. Okay? That's how it works. Nobody can win 100% of the time. It's not possible. Even the robots that on Wall Street, they don't win 100% of the time. They're winning 86% of the time, but that's still profitable. You understand? And that's something you guys need to accept. And that was very difficult for me in the beginning. But if you guys preserve your capital, that's how you succeed. And to be honest with you, learning how to trade, reading the markets, that's only 25% of that, of understanding how to become profitable. Yeah, that's right. Knowing how to trade is not the thing that's going to make you profitable. Sounds ridiculous, right? But it's not. Risk management, capital preservation, knowing how much you're risking before you enter the trade, that's what's going to keep you afloat. That's what's going to make you money, guys. I guarantee it. I promise you. As someone who's currently profitable, I'm telling you, risk management is number one. You need to know how much risk you're putting into the trade. Okay, and I'll teach you guys how to do that later on. This is just a concept. I'm not expecting you guys to become a master trader. This is based off a free, 20-minute presentation, right? You guys need more time, but I'll give you guys education. Don't worry. I will help you guys because I honestly want to help you. I really do. I gain nothing out of this, but I just need you guys to understand this concept. So you're not going to be making thousands of dollars a day. Okay, fine, but you will be making consistent profits. I don't think there's anything wrong with making $200 to $300 a day. It doesn't sound bad to me. Sounds good to me. In a week, you can make 5%. $500 a week? That's not bad. At first, it's not bad at all. That's $2,000 a month. Pretty shit. Yeah, it is. But by the way, $2,000 in Israel is 7,000 shekel a month. Just for you guys know that. That's risking $100. You guys can make $2,000 a month if you're risking 100. That's for my Israeli friends. Yeah, 2,000 here is not so much, but in Israel, that's a lot of money. And then if you're saying, wait a second, if you think long term and you say, wait, if I'm making $2,000 a month, after a few months, I can gain enough where I risk 2% or even 5%. Why? Because I'm not using my money, I'm using the house money. I'm using the Forex gains money. So you can be more risk tolerant. And if you're risking 5%, you're making like a lot more than $100 like risk. You're putting down like $300, $400 risk. You're making $800, $900 per trade, right? And we'll go over that in a second. But you just need to understand short-term like understanding, but also a long-term understanding of, okay, I need to preserve my capital because this is a business that is not going to make me rich in one day. Like all these hype stocks you guys I'm sure you guys know about. Like I said, that's not the goal. If you guys are looking just to get rich quick, please leave the chat. And really, like, that's not what I'm teaching you guys here. We're not getting rich quick. We're getting consistent profits. And that is Forex. That is Forex. It's a job. It's a way to get out of the 9 to 5. You can make the same money working 2 hours a day from your home, and it's beautiful. And that's what I've been doing for the last 2 months. Okay. Okay, let's keep going here. I hope you guys understood that. Let's keep going here. Okay, this was just a trade that I took. I just wanted to break it down a little bit. Okay, basically, this is the section where I'll just go over one trade and just explain to you what I do. Obviously, it's subjective, and this is called scalping. There's a lot of different methods of trade. Okay, there's people that do swing trades where they hold a 13-to-1 position where they make crazy returns, but it takes days for the market to get to that level. And swing trades is a matter of days. Okay, and I don't like to hold a position open for so long because more often than not, it's going to reverse and stop me out. And then when you win those few, yeah, you make a fuck ton of money for sure. No one's arguing that. No one's arguing that. But, and there is a but, I don't feel comfortable and confident enough to open a position for days. I want to identify the trend, go for a 15 pip move, make my $300 in 20 minutes and call it a day, and do that every day. Then have a position open and make $1,000 over 3 days. Yeah, sure, you can make a lot more money, but you have to have a lot of confidence and huge fucking balls to do that, because you have rollover fees. If that trade is not going in your way, you're losing money. And rollover fees are swap fees. It basically means after 5 p.m. each day, any position that's open will be charged by the broker for opening the position. You understand? So it's just not. Some people do it. I personally don't. You can take what I'm teaching you here and apply it to the larger market, and no one's stopping you from doing that. If you're interested to see how I trade and how I make money, then just listen, and we'll see if you guys are connecting to this method or not. So let's start off. You guys can see my mouse, right? It's like it's not small or anything. Like it's good. Or do you want me to draw it out? Like what would like? Can anyone answer? Like, is it good on the screens, the mouse?
It's good.
Yeah, it's good.
Okay, perfect. So here, so the market was coming down. This is the dollar yen, by the way, right? On the 30-minute time frame. Okay. So this means that each candle is going down. So now I know you guys don't know what candles are because most of you don't know how to trade and don't know anything about it. So if I know some of you probably do, but for those of you who don't, I'm just gonna go really quickly. Okay, green means going up, red means going down. You have these things called wicks. Okay, wicks are very important because they show you the range at which the market can move. You see this? This is called a wick fill. It's when the market pushes up, but sellers are still, you see, it's trying to go down earlier, but the market is rejecting this level right here. See, it bounced off this resistance. See, the market went down here. Let's look at the beginning. The market went down here, could not push down below this level, rejected this level, then it showed up. You got a wick fill here. You had a slight rejection, okay? But then it broke through. Then it capped up here again. Went down, down, down. Everyone's selling, selling. Boom. Why? Because it's uptrend right now. It's in an uptrend. It's not in a downtrend. So everyone's trying to sell.
Mari, can you hear me?
Yeah, I can.
Sorry. How much is one candle? Like how much time?
Okay, so like I said, it's a 30-minute candle. So each of these candles are representing 30 minutes of data. So now if you were to go down in the smaller time frames, then you will see, oh, okay, so there's more information. However, on the smaller time frames, it's very confusing because you don't want to open positions unless you're like a true scalper and you're trading on the 1-minute chart and I personally just don't want to base my entries based on the 1 minute because the higher time frames dictate the direction of the market. If on the weekly time frame, the pair is going up, then why would I be looking for sells in a market that's going up? Now you can counter trend trade, which is going against the trend, but that's for like just a small position, okay? But overall, you want to trade with a trend. There's a saying in trading, it's called the trend is your friend, okay? And that's 80% true. Most of the trades that I take are with the trend. Sometimes I go against the trend, and that's because I just use what the market is giving me. So now let's just look at this chart right here. Look at what the market's giving us. right? So like I said, here, push down, went up, could not pass this level, broke above, right? You had a rejection and you had a wick fill. You had another wick fill, pushing down. This is sellers, okay? But really, smart money is buying down here at this level, right? Because you had a 1 tap, 2 tap, right? You see? It's like a little W. And W has a leg up. So you got to tap here, a rejection. If you were smart here, here is where you would buy on this candle right here. But I didn't. I missed this trade because it was early in the morning. I missed this trade. But I caught it here at the end of the move before it went down and reversed. So now let's look at here. He had a rejection, went up. We had a wick fill. And what is a wick fill? Okay, this is what I'm going to explain. You see how the market went up and then it pushed down, but it still closed bullish. Bullish means going up. Bearish means going down. So these would be bearish, right? Because they're going down. Bullish means going up. So these are bullish. So now you had a hammer candle showing significant bullish momentum. You had a continuation of that with a really strong bullish wick to the upside. Oh, my bad. Sorry. Then you had this wick fill. And look, there's no wick at the top. If there's no wick at the top, 95% of the time, it's going to go down because there's no range for the market to go because sellers are trying to regain control. Okay? You had to push down the little rejection here. And look at that. Market's trying to go back, but found support right here. You see, look, resistance, resistance, resistance. Now it becomes support. So now when you have this dynamic shift from resistance of the market to support, think of it like a staircase. So now you have this, it's like this is the ceiling. It can't break the ceiling, but now it's a step. It's a step up for the market. You guys see what I'm talking about? You see, like I hope you guys understand this. This is a very important and beautiful concept right here. So now the market went down because sellers are saying, no, we're trying to sell our positions. We don't want to go up, but the buyers are in control, guys. And you can see that very clearly with this uptrend. So now you had a rejection of this level. Okay, what is this? 105, 940. Or sorry, 950. My bad. 950. You had a rejection of this level. Wick fill. Oh, another wick fill. And now look at this. Another rejection. Okay, but this is called a liquidity grab. Okay, this means that the market dips down to gain more liquidity for then to proceed up. A really advanced trader would have bought on this candle. A second degree trader would have bought here. I was actually not active in this market at the moment. I was doing GJ, the pound yen. It's called GJ. I was in a different market and I wasn't noticing, but I noticed this trade earlier. I put an alert. If it breaks above this level, because you look at this resistance, 1, 2, 3, 4, 5. So I said, wait a second, I missed the move. Okay, I missed the move. But if this level breaks above this resistance, then I'm going to buy. And it broke, but I missed it and I bought here. And I caught this move up before going down. And this was a 1 to 7 risk reward. That was $170 on one trade right here that I made. You see that? But if you were smarter than me and not catching the move at the end, you would have bought here or here. Perfectly reasonable. But here is risky because you're saying, oh, you know, what if it rejects at this level? Because you don't know, right? So imagine you don't see this candle right here. Imagine you're just looking at these. You don't know if it's going to go up or down. Even though it's going up, it might also reject because it has been rejecting right here, went down. So what's stopping it from rejecting again? You don't know. But if a candle breaks above this resistance, very high probability it's going to keep going up. And that's exactly what it did. Wick fill, but then a rejection. You had a resistance here, but it's too late. I already caught the move. And yes, I was late to the party, but late doesn't mean I'm uninvited because I still got my profits. And then the market, by the way, did proceed to violently crash down because in the large scheme of things, we were in a downtrend, but there was a slight uptrend. This is a corrective move. It's going up before going back down. It's like a zigzag. So I caught this little zigzag and I made my quick money. and I don't have to worry about being in the market for hours and watching my trade opening up. Oh my God, is it going up? Is it going down? You get your money, you scalp, you get your 15 pips, and you get the fuck out with your profits, and you call it a day. And you do that over and over again, and you make money. Questions? Anyone want to ask me anything? Anything not obvious, not apparent? Maybe about leverage. I didn't really explain that so much. Pips, anything?
What broking platforms do you recommend that you use in Israel?
Well, that's actually, I don't want to recommend anything because it is depending on what you want. If you want, I will actually look into it because I'm not currently trading in Israel, so I didn't really have any opinion. I just know that there are brokers that allow you to trade. Okay. If you want to actually, well, I can look into that though. Okay. I'll give you a response on that, Khalil. Probably after the session, I'll private message you that answer. Okay.
And me too.
Yeah. Okay. So both of you guys, I'll give you guys answers on that in Israel. In
Thanks.
America, though, for those of you who are in the States, well, in terms of U.S. regulation, I really recommend Oanda. They're pretty good. And they just give you pretty good spreads overall, and they're just really consistent and they have good customer service, and they're regulated. So you're not putting your money in a shady scam broker. All right. Most people hear Forex, they say, oh, scam. It's not a scam, but there are scam brokers. So you have to watch out. So choosing a regulated broker is very important. By the way, in Israel, eToro is the best broker. But I don't think they serve it, but they're based in Israel, but they don't have Israeli clients. I need to look into it, actually. I'll give you guys an answer on that. I don't want to give you guys an answer right now, but I'll look into it for you guys. Anyone else have any questions? Maybe about, like I said, how leverage works or something like
We
that?
have some questions in the chat.
In the chat? Okay, let me see. In the Zoom chat?
Yeah.
Okay, let me look into that right now. Hold up.
Yeah, eToro is
Let's
what
see.
Ben uses, man. Ben works for eToro.
Okay. Facts, due diligence. Can you give another example of a pair? Yes, I can. How do you determine where the resistance is when trading live? Seems easy only after. Okay, it seems more advanced when we begin. Okay, so you guys want to see live. Okay, so I'm gonna go actually out of this market. To the market. Can you guys see my screen right now, by the way? Do you guys see what I'm sharing right now? Can you
Yeah.
guys see this? You guys, everyone sees this chart? Because I was sharing the presentation. I don't know if you
We
if you
still
guys
see the
can-
presentation.
Oh, you're still seeing the presentation? Okay, so let me fix that. How do I have no idea, guys. I have no idea how to do this.
You gotta stop sharing your screen and then share the new screen.
Okay, how do I do that? My bad, guys. Like I said, I've never done this before. So I don't want to do stop recording?
No, stop
Or no,
screen share.
optimize share for full screen video clip. Is that it?
No, just stop it and then do it. And